Eric Muathe, muathe.com. Let's take a look at this chart example here. It gives us a little bit of an understanding as to how stocks respond to certain levels. And let's begin with some obvious levels here. RSI broke out here, and this breakout began this nice move from about $8. The stock would gap up and subsequently trade as high as the current levels here of about 24. But if we draw a line around this 50 level where the breakout took place, so let's keep that, draw the line there. Let's take a look at what happens whenever there's uniform activity support around the 50 level, which is also coinciding with this breakout line here where the RSI broke out, corresponding with this entry, right? So every time the RSI bounces on that line, there tends to be a reaction or move to the upside, especially if this bounce is with uniform action. So uniform action below 50 back above it, uniform action below the breakout line back above it for this re-entry, which was successful. Here we have a double bottom, support below the 50 line and below the breakout line. Again, this breakout line that I'm talking about is this line here. So uniform activity bounce. How do you notice uniform activity? Because you can split that in two. So look something like this. And the line is somewhere here. I'm saying if you split this in two, you can see this is uniform action on this side and this side. That's what I call uniform action, which is double bottom support here. And of course, this was successful, moving the stock from about $17 to the highs here before the pullback of about 23. And over the last couple of days, we've had a sharp uniform activity. Another extreme example of what happens when a stock moves below 50, back above it with uniform action, and also below the breakout line and back above it with uniform action for this re-entry during today's gap up low. So we see the same principles being repeated here. I wanted to use this chart example because it's an extreme example of what I call uniform activity support. As you can see, this is uniform activity below 50 back above it. There's no way you would have anticipated that, but what I want to emphasize is that it is legit. Somehow markets tend to respond to this uniform activity. In fact, if you take a look at where this movement began, which is here, this RSI movement came off the lows here. And we see that this RSI movement was successful in taking the stock off the lows of March to substantially higher levels, right? So what we know is if we come back to that level with uniform activity and hold that line, especially and more so with uniform activity, that tends to be a buy signal. And like I said, this is an extreme example, but it still plays out perfectly. So again, we have uniform activity below the line, back above it. Let's just do that one more time. And so what we are talking about is we go figure out where the movement began off the lows, which is this entry off the lows there. Draw a line from there, should be there. And in the future, every time we bounce on this line with uniform action, support, like we did here, the stock gives us a re-entry signal. And that is accurate. Now, let's take a look at what this means, because I think we can take a look at today's gap up move. Nice gain, almost 28-30% gain. And I think this is now becoming a trap for several reasons. I believe the stock is coming back to test the break level. So this recent break gave the stock a reaction or move lower from 28 to the lows here of about 18 and change. So we draw a line from this break point, and the stock has rallied all the way back up to that level. I think around here we could easily stall. And again, let me draw that again. It's a simple way of looking at it. It's just the reverse of what we did to find the entry of the lows here. It's a break, and then draw a line from this break point. You can see that we are coming back to test this break line. If we cannot move above that line, chances are we start stalling from here. Also, take a look at the hourly chart. And the hourly chart here, if it looks different from your chart, is because on my hourly settings, the RSI is set at 26 so that I can remove as much noise as possible. Now, again, we see the same type of analysis. we have this break. This break brought the stock lower here. Draw a line from there. We can see that at the highs here, we never even got to that red line. So this did not even get to that red line. But now, after coming all the way down here in this sharp reversal, we've done a huge turnaround, but we've only come back to test the red line. So I think already the hourly chart is suggesting that around here, this is as far as the stock goes. Additionally, visually, we can also see that it is coming back to test the top side of its hourly RSI line, if you draw it like that. So we are coming back to test that line right there. We're already showing that it is pulling back. So hour to hour, I would suspect that the stock, after finding support on the daily chart, is now looking like on the hourly, this has been such a huge reversal that it is hitting some type of a ceiling. All right. Now, there's also something else I'd like to discuss here briefly. It is this substantial drop over a period of a couple of days. In fact, you can see the reason for that, in my opinion, is what the RSI did was it recorded the worst type of negative divergence. I've been talking about this in the last couple of video series. We made a higher high on an hourly closing basis, but you see that the RSI failed to make a higher high. In fact, the RSI failed to move above 61.8, which is the reason after this high was recorded here, the stock went down, because this is the worst type of negative divergence. Again, at the highs here, that was a red flag because you had an improvement in hourly closing highs. RSI had negative divergence, and that negative divergence was the worst type of negative divergence. Why? Because as the stock recorded this high, the RSI at this point failed to move above 61.8. One more other observation, and keep in mind most of these are my own concepts. That's why I might be the one who understands them the best, but there's a reason why I think this is also another reason this is where the stock stalls based on the highs here for the day. Let me show you another line. It's a back test failure line. Take these highs, this break right here. So there was a break here, gave us a reaction or move lower. Extend that line because it's packed with information. You see what I'm saying here is we've already hit this line with what was double top rejection on that blue line here and again here. And guess what? With today's move higher, we've come back, we hit that level and we stalled. So lots of resistance levels around here. My feeling is that now things are switching around from a buy signal. The daily and the hourlies are suggesting that now the next meaningful direction for this instrument is lower. It's a great example. It's an extreme example because of the violent movements, but it captures the essence of most of the technical things we talk about. Eric Mwatha with Mwatha.com. As always, good luck, peace, and blessings. EACS. And so it is. Mwah.